Hey, welcome back to YT Finance, and today we are talking about Sensionics stock news and how high their SENS stock price can go. We will be talking about a $6 SENS stock price target, and we will look over Sensionics' recently released earnings report so we can view how much their revenues, earnings, expenses, and free cash flows have increased or decreased. We will also discuss what analysts' price predictions are for SENS stock while also performing some stock analysis. Then lastly, we will briefly touch on any and all FDA approval news updates regarding their CGM system. Remember to like this video right now for more SENS stock news, comment your SENS price predictions down below, turn on all subscription notifications to stay informed, and now let's get right into the video. In Sensionics' Q2 earnings report, it says that the company generated revenues of $3.3 million, which is great news. More good news is that Sensionics' business partner, who is Essentia Diabetes Care, has recently launched a US assistance program that will reduce the out-of-pocket costs for diabetes patients, and they also launched a direct-to-consumer marketing campaign to raise awareness about Sensionics' Eversense continuous glucose monitoring system for the diabetes community. In the most recent quarter, more news and highlights from Sensionics was their PROMISE study, which proved the safety and accuracy of Sensionics' Eversense 180-day system. Right now, the company is still waiting for FDA approval on their CGM system, but we are anticipated to get an approval this quarter or next quarter, which is great news. Some more good news is that the CEO of Sensionics had this to say about their second quarter financial results, and I quote, "In the second quarter, we made progress driving increased patient and provider awareness of Eversense through a targeted direct-to-consumer digital advertising campaign and presentations of the PROMISE study." Tim Goodnow, who is a PhD, president, and CEO of Sensionics, continues and goes on to say, "As announced when we submitted this data to the FDA, we are pleased with the strength of the data from the PROMISE study, which we believe represents a top-tier CGM safety and accuracy profile. Along with our commercial partner, Essentia Diabetes Care, we are excited about the opportunity to offer more patients the longest-lasting CGM systems." Now, if you don't know what the PROMISE study is, you can always go to my channel and look through the videos, because I already did a whole video on the PROMISE study. But just to catch you up really fast, it just proves the accuracy and safety, like I said earlier, of Sensionics' 180-day CGM system. In fact, the study was so good, it was presented at 2 different conferences and added to a few medical journals. But with that being said, let's dive deeper into the second quarter 2021 financial results for Sensionics. The total revenues for the quarter was over $3.03 million more than what they brought in for the second quarter of 2020. Of Sensionics' total revenue, approximately $0.98 million came from inside of the United States, and $2.31 million came from outside of the US, which is how we get the total revenues of around $3.3 million. More good news is that their gross profit increased by $1.54 million year over year to $0.39 million. Also, Sensionics' sales and marketing expenses have been lowered by $1.5 million year over year to now where their expense for this is $1.64 million, so that's a great improvement. Sensionics is looking to make their CGM systems even better, so their research and development expenses increased to $7.11 million. Other expenses that have increased include general and administrative expenses, which have increased by $3.09 million for a total of $7.53 million. The bad news is that their earnings came in at negative 42 cents a share due to the increase of all of their expenses. Luckily, this has not impacted the revenue forecasts at all, because the company still anticipates total revenues to be between $12 and $15 million this year. Some more good news is that SENS stock has a short-term technical score of 62, which means that over the last month, Sensionics stock has been more bullish than 62% of all other stocks on the market. What is even better is that in Sensionics' specific industry, the stock has a more positive sentiment than 74% of all other stocks. But analysts still seem to have a low average SENS stock price target of $2.37. Sensionics currently has a long-term technical technical score of 78, which means that it currently is placed higher than 78% of stocks for long-term holding, given the stock's future potential. But remember to take these technical scores with a grain of salt, because these scores can change very quickly in a short amount of time. Also, this is generated from a computer program that looks at both fundamental and technical factors and not actual people, so keep that in mind. The author of the article that we are looking at has successfully predicted that SENS stock would rise from $1.80 all the way up to $3, and now he is predicting that the stock price can reach $6 once the FDA approval comes in. Right now, Sensionics has a $69.75 million worth of cash on their balance sheet, but the company has burned through $30.4 million just in the last 6 months. This means that Sensionics does have enough cash to sustain their cash burn rate for at least another 12 months, which is perfect because FDA approval will definitely come in before that, so it's great that they have enough cash, but that cash won't even be needed to sustain their cash burn for much longer. Once Sensionics gains FDA approval to sell their CGM in the United States, this will push Sensionics into becoming profitable within 1 year. Analysts project that the average revenue for next year is forecasted to be $33 million worth of sales. SENS stock still trades at a high forward sales multiple of 42 times, even if we use projected sales for 2022. Although that is a very high multiple, the SENS stock is still forecasted to follow in the footsteps of Dexcom stock growth, which is fantastic. If we fast forward to 2025, analysts estimate that Sensionics will be making $160 million in yearly sales, which would mean the PS multiple would now only be 13, which is a much more reasonable number. The company is also predicted to make a 25% free cash flow margin, and if we use a 1.5% FCF yield, this would mean that the SENS stock could be worth $4.03 per share, but it gets even better. If we use a 1% FCF yield instead of a 1.5%, it would mean that SENS will have a market cap of $2.6 billion, which means that the share price can be worth $6.08 per share. So if and when Sensionics gets FDA approval, and if analysts' revenues and free cash flow forecasts are correct, Sensionics could and should be worth $4.03 on the low end or $6.08 on the high end. But what do you all think? Comment your SENS stock price predictions down below, like this video right now for more stock market news updates, turn on all subscription notifications if you are new, and I will see you in the next YT video.